Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what do we talk about? Well, when I was putting together this presentation, I said, I really want to go through these walkthroughs once again. And I know we do that quite often. And I got to thinking, should I be showing you this once again? And the answer is yes. And I have a bit of a book fetish, for lack of a way of explaining it. It especially when it comes to trading and trading psychology. And I'll order books and just throw them on a shelf. I ordered a couple yesterday, by the way. And, every now and then on the way to library hour, I'll grab a book, a new book, new to me, off the shelf and go read it. And the other day, I grabbed one off the shelf. And then people, by the way, also send me a lot of books, too, because I'm in the industry. And this particular gentleman, he had about, 100 or 150 different patterns that he was trading. And he showed one sort of cherry-picked example of each pattern. And number one, it doesn't do you much good if I or anyone else show you 100 patterns and then show you one cherry-picked example. And number two, I wonder if he really is trading 100 different patterns. And, I would never throw anybody under the bus, but I find that quite dubious. Anyway, so in showing you trades, many of which are shown through mystery charts, and then other ones are showed ahead of time through the Facebook group and through my trading service, and then walking you through how they work, good, bad, and sometimes indifferent, I think you can learn a lot from that, actually seeing it in action. So if I could do it, I really do believe so can you. Now, along those lines, we have a mystery chart reveal. I want to talk a little bit about establishing free positions. And I want to talk about some of my free positions in addition to the ones that were established in the trading service. You'll see those in just a few minutes. And that'll make a lot of sense. And toward the end of the presentation, I'll talk a little bit about crypto. By the way, housekeeping, I do take requests because this show is in a limited format or limited time format. It's hard for me to cover them, but what I have been doing over the last year or so is covering those in the weekend charts, which is every Thursday night at 6 o'clock, unless it's a holiday or something, obviously. If you need to find me, DaveLandry.com/StockCharts and DaveLandry.com/contact. If you go to the StockCharts link here, I'll send you the slides from this presentation and all the other presentations, a lot of which have obviously the walkthroughs, but also rules to patterns and systems and market timing and things like that, and money management. And I'll also give you limited access to the members area, enough to keep you busy for a long, long time, including all three of my books for free in PDF format. So get to know me first. Now, I want to do a mystery chart reveal real quick before we hop into the methodology in action. This is the mystery chart from last week, and it is ARLP, and this is the slide from last week. And as I said then, it was a cup and handle, and entry here, stop down here, initial profit target up here. And let's zoom that in, and then I'll show you the actual recommendation. Now, if you want to go in and look at these recommendations, DaveLandry.com/archives. And if this one isn't quite there just yet, I update the archives about once every 3 weeks. Then you can go to this direct video link here. And again, you can get this from the slides if you request a download. So anyway, here's the setup, ARLP. We're going to buy 2,000 shares. This is based on a hypothetical 100K account, but I do try to mimic this in my own trading, in my own accounts, very similar to what you see here. So the service is doing great. I'm probably doing pretty good. If the service stinks, I'm probably stinking too. Somebody calls me and complains. I'm like, I feel your pain. Anyway, entry was 49, stop at 389. It's 1 point. Seems like a lot for a cheaper stock, but it's a pretty volatile stock, so that's what it called for. So if you broadcast that up, that's 589 would be your initial profit target. And remember, at the initial profit target, we'll take half. And that'll make a little more sense when we get to free rolling. And if you want, stop the video and go in and watch the money management videos that we've done. And that'll fill in some missing blanks too, missing holes too. Anyway, so 490 entry, 390 stop, round numbers, 590 initial profit target. So entries here. The initial stop is down here. initial profit target. Remember, we're going to take half off, and at that point, the stop will be at least at break even. And then we're going to continue to trail it, but in a little bit more loosely manner. So let's see what happens. Triggers didn't do a whole lot up until the time I did this capture. And luckily, it has begun to take off, and it's up about 30 cents today. So that's certainly a good thing. You can see what was initially in the portfolio, it was at a negative. Now, I talked a little bit about this last week in the weekend charts, and I want to follow up on it a little bit and then show you some of my positions in addition to these here. Again, I have every position that I'm showing you here, and it was recommended ahead of time. And anyway, free rolling, I was guest of honor a couple of years ago, as I said 1,000 times, because I'm very proud of it, at Charlie Kirk's retreat. And he held a retreat down in St. Lucia, invited some of his clients down, and he invited me to be the guest of honor. And when I was explaining my money management, he says, I like the way Dave's doing that. And he dubbed the phrase free rolling. So basically what you're doing is you're getting your swing trade out of the position, and then you're holding on to a piece for hopefully, and I know you should never use that word in this business, but hopefully a very, very, very long time. So if you look at the open portfolio, everything that's still highlighted is still on, or that half is still on at least. The ones that are highlighted yellow, like right here, this is a position, as you can see, look, I'm showing you a losing trade. First guru ever, right? To show a losing trade. So far it's a losing trade, but we're not stopped out yet. But the ones that have the white, you can see we took a swing trade profit of 1%, or ideally at least 1%. And that's based on, again, a hypothetical 100K account for educational purposes. But I actually do take the trades. And you can see this trade here is working out okay. We've got about $1,000 of open profits on that. So in an ideal world, obviously, everything hits the initial profit target, and we have a quote-unquote free position or free rolling. So the worst could happen is we get stopped out, or the best could happen is that we continue to trail that stop higher and ride out a position for a long, long time. When I did this presentation last week, I was surprised. I didn't realize we were actually up 100% in this one position. The reason is because I had rolled out on options about 6 times on this one, and I didn't realize that the outright position was doing so well. So anyway, that's the free rolling aspect. Go in and watch the money management presentation that I did for a little bit more on that. Now, I want to follow up with some of my own free rolling that I've been doing lately. And remember, if I could do it, so can you. It kind of reminds me of, everybody remember Yan Can't Cook? If Yan can't cook, so can you. So if Dave could trade, so can you. Anyway, there's the parameters. As you can see, a little screenshot from my brokerage. And on this, I'm in the hypothetical portfolio. It's a 100K account, but I am taking all the trades. And in that particular account that I'm taking the trades in, I'm also taking a lot of these ancillary cases. And in some cases today, you'll see, based on where I am with the margin or how far into margin I want it to be, some of my position sizes are a little bit smaller than would normally be taken on a 100K account. With that said, I wasn't really too excited about a bank, but the range began to expand. It formed a buy at B pattern. Go in and watch the presentations we did on IPOs, and also see the prior weekend charts as many as you can stand on my YouTube channel, youtube.com/c/Dave Landry, and that'll get you up to speed on that. And we've talked about a lot of these IPO type of patterns in the past several presentations here. So anyway, buy was here. We flipped out half, and I say we often because we talked about this particular stock in the Facebook group, and almost every stock that I will ever show you, never say never, but almost every stock that I've ever showed you, I've talked about publicly, either through my trading service or through my Facebook group. So I know that additional people are also in the trade. And that makes it kind of great because we can kind of talk back and forth. Hey, where's your stop? Where's your IPT? Etc. So we did the math on the first loaf, and we ended up with $1.35 profit. Now, it is a bank, so $1.35 in a bank is not bad, considering when it's a lower price stock like this, about, 15% or so. So it only comes to like $6.80 in the first loaf. But again, probably had a little bit smaller position size based on the amount of margin I was using at the time. And we're still in this trade, and just based on a little mark to market a few minutes ago, it was at 16.28. So 16.28 minus 12.94 is $3.34 times 500 equals 16.70. That's much better than the poking on. You add the 16.17 to the 680, and that comes to 20 something $100, and that's 2 or 3% on a 100K account. So that's a decent little trade there. And hopefully, I always hate to use the word hope, but hopefully we're with this trade for a long, long time via a trailing stop that we allow to widen gradually over time. Now, again, go in and watch the money management for a lot more than that. So here's another one here. I bought it at 16.24 and was able to flip out some shares. Now, this one turned out to be a little thin, FYI, a little thin and nice, not nice, but a wide spread, making it a little difficult to trade. It had plenty of volume going in, but then the volume began to dry up a little. And that's one of the problems with IPOs. And I want to try to show you the good, but also kind of let you know the bad too. But you can see we bought it here on the buy at B pattern. Remember the buy at B, as we talked about quite a bit. If the first day, let's see, 1, 2, 3, 4, 5. So this is the first week. If the first day sets the high for the week, okay, then it also has to close above that high. So we're buying a new closing high of this pattern, provided, of course, day one doesn't set the new high. So in this particular case, new closing high would have actually been on this day here. Although it would have worked, I prefer to follow the rules of this system in having it also close above the day one high. And you can see this position did fail kind of miserably at first, but now it has begun to work out nicely. So if we did the math on the initial exit, that's $4.15 times 200 shares equals $830, which is fairly close, or close enough to the 1% or $1,000 we're trying to get to on the trade per 100K. Now, as you can see, so far so good, knock on wood. This trade is still open and still working at $22 and change. So we take that 22.16 minus 16.25, gives us $5.91 on 200 shares, and that's $11.82 on the remainder of the position. So you add all that up, and you're right at about 2% on the account, which is much better than the poke and the eye. And here's the deal, hopefully, and again, you got to be careful using that word hope, but hopefully we're able to ride out this trend for a long, long time via a widening trailing stop. Now, here's another one, 200 shares at 23.53, round numbers. So the buy was here again at buy at B, same sort of pattern again. Notice that day one set the high for the week, okay? So we're going to buy when it closes at a new closing high, and it's also above that close. Let's say on day two, it would have rallied up somewhere like here, up here. The high was up here above this day one high. Then we no longer worry about that rule, and we would have bought on, I think this day here would have been your new closing high, okay? Anyway, it kind of failed miserably at first, but it didn't stop us out. And we were able to flip out 100 shares here, or at least I personally flipped out 100 shares here. So it's $30.54 minus 23. That's $7.01 times 100 shares. That's $700, okay? $701 actually. And I did a little mark to market right as I'm going live here, or just a few minutes ago when I grabbed this slide. And it was at 30.60. So we take 30.60, subtract 25.53. It's $5.07. So there's $507 left in this trade, and we're fairly close to stopping out in here. I have a stop down here somewhere. So, but even if we do get stopped out, it'll be at a profit, and we'll just shout next and move on. By the way, this is a pretty good looking stock. I almost made this week's mystery chart, but I thought as a gift I would give you this stock. And truth be told, I am long, but I may be stopped out by the time you see it. But it's a good looking pullback. We had a nice uptrend and a nice pullback. This is almost a textbook setup in here. So keep an eye on that one in GMS. And hopefully next week I will get to say you're welcome. TLS, again, an IPO. IPOs have been really hot lately. That's why I've been spending so much time on IPO. So here are all the trades on it. You might notice a little day trade I snuck in here. And what happened was on the 6th, it was kind of coming unglued earlier in the day, and I saw an intraday reversal. Now, I do preach against day trading, but in this particular case, it's kind of what I call a S&G trade. I figured it was worthwhile. And I just squeezed out $100 and change. Better than poking the eye, though. You know, you do that every day, it adds up, but you got to be careful because you could also lose money doing this too. But the real money, as you can see, or as I hope you're seeing here, is in the longer term trades. So 400 at a new closing high, which was also above the day one high. Again, if this day was higher than day one, we don't worry about that rule. But it just so happens that this closing high is above both, is above the highest close and also above the high for day one. Okay. So let's do all the math on this. We flipped it out at $28. Even $23.25 was our entry. That's $4.75, 200 shares. And you can see we're a little bit closer to that 1% number we're aiming for per 100K. Now, if we do a mark to market, 31.60 minus 23.25 is $8.35 times 200 shares. So that's $1,670 right now, as per the snapshot at least, in this particular trade on just 200 shares. And hopefully, and I know it's dangerous to use that word, and every time I use it, I remind myself, be careful when using that word in this business. But hopefully, I'm able to stay with this position for a long time. And so far, so good via an ever widening trailing stop. Again, watch the money management for more on that. So this is PTVE. I wasn't very excited about this stock because it's plastics. I think they make plastic forks or something. But I was talking with a couple of you guys and girls in the Facebook group, and then when it began to expand in range, your actual buy, by the way, was back here. Okay, actually, let me squint my eyes and see. Yeah, right here would have been your buy. But I didn't feel like the range was enough, and so I took a second entry on this one when the range began to expand a little bit. It sort of failed miserably after rallying a little bit, but then it began to rally nicely. So when I unloaded 500 shares here, it's 1551 minus 1390 is $1.61 times 500 equals $805. Now, had a stop right around here. And if you do the math on that, 1620 minus 1390 is $2.30 times 500 equals $1,160. So overall, the trade made 2% overall on the count. So better than poking the eye. If you do this on every trade, you'll be fairly rich fairly soon. Now, this one obviously no longer free rolling, as I was getting ready to put the presentation together, or work on a presentation, I should say. I did get stopped out on that one. Now, let's take a look at some future free rolling. At least I hope. I know, very dangerous word in this industry, hope. But I do think they have potential. Here's McAfee, day one. What happens on day two? Well, we take out the day one high. So the day one high rule is no longer in effect. It only has to close at a new closing high. Day three, day four, and on day five, it begins to fail miserably. There's nothing to do until and unless it closes above the day two high. Now, in the weekly charts, I said last week, I see no reason to go after this one unless it closes above 1950. Now, I said this in a live webinar, which turned out to actually be 1850-ish, or 1860, as you could see in this particular chart. But it did close at a new closing high, and I did as I said. Now, it's one thing that's helped me out a lot. It seems like in this industry, I guess because of all the scumbags out there, you have to justify having an educational business. But from a selfish perspective, my educational business, I make these public declarations. If this stock closes above this level, I will buy it. And when it comes time to buy the stock, it's pretty easy for me because I said that I would. And I don't sit there and think, well, should I buy it or should I not? Or what should I do? I say, well, Dave, you said you're going to buy it, so go out and buy it. Anyway, I did buy it at the close, which turned out to be right around that 1950 number, ironically. So we'll see what happens. Now, here's another one that I talked about in the weekly charts. Day 1, it's got this big old wide range bar, nothing to do. Day 2, day 3, day 4, and day 5. So the high was set on day 1. So it not only has to be a new closing high, it also has to close above that day 1 high. And in last week's weekly charts, which you can find at davelandry.com or www.youtube.com/c/davelandry. And please subscribe and join the channel if you are there. Anyway, I said $13.50, I will buy this stock. So what happened at $13.50? Well, actually it closed at 14, which was above the $13.50 level. Remember, this is a buy on close, a market on close system or methodology setup. And there it is right there. So I bought 1,000 shares at $13.99, round numbers, a few minutes before the close because it looked like it was going to close at that level. And the other thing too is if I have a lot of positions on, like I have now, as you can see, I'll get in a couple of minutes early on these buy at Bs, provided, of course, it looks like they're going to at least close well above the entry. Now, here's an interesting question. Does it work with crypto? Because crypto, up until yesterday, was pretty darn hot. And my answer is yes. Or as we say in Fargo, you betcha. Now, if you go in and watch a presentation I did a few months back, I pointed out that there was a TKO in Bitcoin, and I actually took the trade, and I'll show you that in just one second. It was also what I call a Landry-like pullback, and that's when you have daylight for at least 10 days or so, and then you have a pullback to the moving average, which is illustrated down here. Now, without going into a lot of details on Landry-like pullbacks, we talked about them quite often in prior shows, so go and watch the shows. Not the last week at Bandcamp, yeah, but anyway, you can see it did tag the moving average. The count goes down to 0. Remember, this is just a count, number of bars above the moving average. But it makes a really nice graphical representation. If it's flipping back and forth from green to red, you know, the market's choppy. If you have a lot of green, you go, aha, the market is headed higher. Or you could just eyeball it and draw a big blue arrow higher, and that's what I like to do. So here's the other slide I showed back then. It's a textbook TKO, entry above the high, stop right below the low. Initial profit target equals entry plus, open parentheses, entry minus stop or the amount of risk. And that makes for a very easy trade when you get these textbook TKOs. Everything's kind of already laid out for you. So entry above the high, stop below the low, and then project your initial profit target higher. Now, I think I got in right around here, at least on part of my position, and I'll walk you through the actual trade right now so you can see that. Before we do that, let's take a look at Ethereum. Same sort of pattern back then. It was a TKO, and it didn't quite tag the 30-day, but close enough for government work. And this is why I don't rely completely on an indicator. Let's say you were scanning for a pullback to the EMA. Nothing wrong with doing that. But you would miss this particular case where it was just a fraction off of hitting that EMA. But certainly a decent-looking TKO nonetheless. Now let's walk through this Bitcoin trade, and then we'll take a look at the Ethereum one. So again, we have a TKO down to the 30-day exponential moving average. And notice that the Landry light goes from way up here, around 40 or so, and then drops down to 0 as it crosses the moving average, or more accurately, as it touches the moving average. Entry above the TKO high, stop below the low. This is a textbook TKO. By the way, a TKO should stand out like a sore thumb. A lot of times people say, hey, Dave, is this a TKO or is this a TKO? And the answer is, well, it should really, really stick out. So notice this big bar, bigger than all of the rest of the bars, really standing out. Really hard move down. One litmus test, if you're already long a market and you get knocked out, as you'll see I did later in this trade, then it was probably a big enough TKO to trade. So if you're not long the market, just imagine, hey, I'm long this market. Would this move have knocked me out? Initial profit target is up here. That's just a simple math projection. And those are the parameters. So $3,000 above the entry, $3,000 below the entry in this particular case. Let's see what happens. It triggered, didn't really do that well, and then finally began to take off, hit that initial profit target, and kept on going. So a trailing stop in this case looks something similar to this as a stock, or in this case, cryptocurrency, moved more and more in my favor. I trailed the stop higher and then eventually got stopped out. Now, if you look at this actual trade here, you can see I got it around 19,310. When I checked my records, I also had a previous trade a little bit lower than that. I think I was looking to get in a little bit early and then take this as an official setup because crypto's open 24 hours a day. You can maybe get in a little bit earlier in cases like this and then have that stop in place. And then I'll show you one more other advantage to it being open right here. So same sort of action in the Ethereum, but like I said a few minutes ago, it didn't actually quite touch the moving average, but this is a TKO. And what I like about this one is notice that it was kind of gradually working its way higher and then began to accelerate higher. I got a little bit ahead of itself, big old knockout move before it began to take off. Linda Rasky once said that the market will often do the obvious in the most obvious manner and will also do what it has to do to frustrate the most amount of traders. And I asked her where she got that. She said, probably off the floor. And she said she's very humble. She said it wasn't an original thought. But anyway, in this particular case, this thing is obviously headed higher, but what's it going to do first? It's going to knock out some people to frustrate some people. It's going to do the obvious thing in the most unobvious manner. Now, entry would be above the high, stop below the low, and then we broadcast the initial profit target higher. So looking to get it at 600, stop at 400, initial profit target at 800. And like Bitcoin, it really didn't do a whole lot at first, but then it began to take off nicely. Now, here's the original trades that I took in Ethereum and got in right around here, as you can see on the chart. And then when the initial profit target was neared, because the market is open 24 hours a day and not like a stock, I went ahead and put in a stop at 700 as that initial profit target was neared. And then as the market moved more and more in my favor, what I did was I raised that stop for the initial profit target to exit half to higher and higher, and it ended up getting stopped out on that position at 1,000, or half of the position at 1,000, and then the remainder was stopped out here. Now, one thing about trading, just real quick, is it can be a lonely sport, and believe me, I've been there and done that. And one thing that's helped me out tremendously is my Facebook group. So it is free, and I really think it's really, really worth it. However, you do have to be a gold member of DaveLandry.com. You can interact with other traders, ask for help, and it's pretty cool because, like, just recently somebody admitted a big mistake they made, and we all chimed in and said, hey, we all make those mistakes, and I'm sure this gentleman feels a heck of a lot better about it. And the other thing, too, is I'm pretty sure he won't make that same mistake again. And on a similar vein, as I admitted in my video that I did for the reflections for 2020, by the way, this for the first time, last year's hindsight will be 2020. Anyway, but it helps if you are able to talk some of these things out and talk with other people. So I don't think I'll make those same mistakes for quite some time. Anyway, you can follow along with other traders, what they're looking at, what I'm looking at, and things like opening gap reversals. If you need to reach me, once again, DaveLandry.com/contact. If you want the slides from this show and all the other shows, which include a lot of my setups, market timing, and things like that, go to DaveLandry.com/contact. I'd like to thank everybody for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.